Today's Asian session was quite remarkable for traders. In our video review, we will talk about the US dollar correction, the yen's consolidation, and some other events. Stay tuned. Yesterday, the US dollar index, which measures the greenback against the basket of 6 major currencies, declined to 96.20 points. Thus, the currency stopped its one-week low rise. Analysts suppose that the US dollar index dropped amid lower yield in the US government bonds. In addition, market participants are looking forward to the US inflation report that is slated for release on Friday. By the moment, the index has recovered to its average trading range between 96 points and 96 and 60. It's likely to continue hovering within the range until the publication of inflation data. Meanwhile, Japan closed a bulk of information, though rather negative. Thus, in the third quarter, Japan's GDP slid by 0.9%. Against this background, the Japanese yen may slump to 113.80 against the US dollar. Notably, the currency touched this level yesterday. However, the downward correction is expected to be short-lived. At the same time, on Wednesday, the Australian dollar hit its weekly peak against such safe haven currencies as the US dollar and the yen. The jump was caused by the rise in appetite for risk, boosted by news about Omicron. Experts suppose that the new strain could be less dangerous and less resilient to the existing vaccines than expected. This is really good news that pushed the AUD/USD pair to 0.7125. There is every chance that after an insignificant correction and a pause, the Australian dollar may show even a stronger jump to 0.7160. In general, the global market situation has encouraged traders and pushed up shares and risky currencies, including the Australian dollar and the Canadian dollar. And that's all for now. Do not hesitate to leave your comments and opinions. See you soon!